The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the December 26th terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I'm grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools, well, just simply tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with empowering beliefs. I hope everybody out there had a fantastic Christmas holiday, a day off, a little day of rest out there. It's back to work, or maybe some of you are on your way out to shopping, whatever you're doing, just be careful out there. And remember this, it's all about thanks living. That's right, thanks living. Thanks living centers on things to give thanks for. And more importantly, a grateful mind is a mind that will eventually attract itself to great things. It's our attitude of gratitude that opens the door to abundance in our life. And thanks living, if lived on a continuous basis, will create more good in your life than anything else you can possibly do. Because thanks living is a way of life, and it's a way of life no matter what our circumstances are, no matter what challenges that you and I face. You see, perhaps the most difficult, yet most powerful of all, is to give thanks for our problems, or our obstacles, or our challenges. The reason is this: as we face our situations and overcome them, and yes, you will overcome them, guess what? You become stronger, you become wiser, and you become more compassionate. Something to think about. Think of it like this. We learn mathematics by solving problems, and we prepare for an athletic event by practicing against a stronger opponent. Have you ever played a game of chess? Who would you learn more from, a stronger or a weaker opponent? Exactly, a stronger opponent. And if we can learn more from a larger problem, that just makes us stronger, folks. Be thankful and be grateful if you have problems in your life. There's an ancient proverb. It says, a donkey may carry a heavy load of gold on its back and never know its preciousness, only its weight. I know sometimes we feel the weight of our circumstances and we lose sight of the precious nature of the many gifts of life. Adversity, folks, when overcome, it strengthens us, and therefore we are giving thanks not for the problem itself, but for the strength and knowledge that results from our experience or the experience we are about to have. Perhaps we should give thanks ahead of time, for we will grow, we will get stronger, and we will overcome every challenge we face. Thanks living, folks. It's really what it's all about. Well, let's go give thanks for these markets here. That is, if you're a bull. The Dow, it's up 55 points right now. It's trading at 16,413. S&P is up 4 points. It's trading at 1837. NASDAQ Composite, that's up $8. It's trading out at 41.63. Russell 2000 up 5 points. It's trading at 11.67. Apple struggling this morning. It's back about $2.80. Trading out at 5.64. Microsoft is up about 0.75%, up 28 cents. Google's up $1 right now. Leading the charge the upside, it is MasterCard. I'm sure having a good season no matter what was going on out there. MasterCard is up $6 right now. 3D Systems up $4. Tesla Motors up $4. Toyota Motor Corp, that's up about $3. Stratasys up $2.50. You've got Lockheed Martin up $2. Fossil Group up $1.77. Decker's Outdoor up $1.66. To the downside, you've got Apple leading the charge. Oramed Pharmaceuticals off $2.70. VIP Shop down $1.80. Goodrich Petroleum off $1.37. Not a lot. LinkedIn is off 97 cents. Not a ton dollar-wise to the downside in the market. Let's begin our day by taking a look at the New York Stock Exchange. And what a beauty it is. Right now, trade at 10,312.29. It's on its way to 10,387.17. And if it takes out that high, folks, it'll be taking out its all-time high. It'll be taking out the 2007 high. It is the only index out there that has not broken above its consolidation pattern, at least here inside of the U.S. We are going to learn a lot about these markets here coming from the New York Stock Exchange. Of course, it broke through that 3 drive to a top pattern. That was well, go ahead and put that on the screen here in case you are watching us on Tiger TV. That pattern looked a little like this out here. No, that wasn't a 3 drive. It's back a little bit further. Somebody say, hey, Steve-O, you got to grab that right 3 drive to a top pattern out here. Here is that pattern. And the 3 drive to, there we go. That 3 drive to a top pattern, folks, that is one of the more bearish reversal patterns out there. And when it fails, you learn as much from failure. You learn more from failure, quite frankly, than you do from success. And guess what? This pattern was a colossal failure out here. A colossal failure. It never even made the 0.382 retracement. That's the minimum retracement that one should make when you see a reversal pattern such as this out here. A colossal failure. That set up that price was going to move higher. Now we know where price is headed to. It's headed because we are trading inside that swing point on the daily basis out here, and we got inside there on Monday. I didn't catch it on Monday, but I certainly did on Tuesday afternoon. 195.58, that's the low of the swing point. It wants to go test that high, 10,387. All systems are go for it to continue north out there. That is on the New York Stock Exchange. The old VIX index here, the liquidity indicator. Stop calling it a fear indicator. It's better off to be taken a look at as a liquidity indicator. When it is traveling below the 50-day exponential moving average out here, it's telling you there's liquidity in the marketplace, and we've got liquidity. The 50-day exponential moving average as we speak here right now, it's priced at $14.02. You got the VIX traveling at 12.31, so there's liquidity in the marketplace. There is a place for money to go. If we take a look at the S&P 500, here's one of the spots. It has completed the 1-to-1 A to B equals CD up. That's coming off of the swing point low. This is the small pattern. This is the one coming off of November 7th low, 1746. That's your A point. Your B point is the swing from November 29th. That was the day after Thanksgiving. Today, of course, the day after Christmas out here, and the day after Thanksgiving, it's a shortened trading session. Today, it is not a shortened trading session. And quite frankly, Tuesday, which was a shortened trading session, the volume was pretty massive. You had to double it. But volume for a shortened trading session, for most people not being in the office, volume was, if we had that full day's volume on Tuesday, we'd be talking about pushing into patterns with volume out here. The 1-to-1 A to B equals CD on this, if I didn't say it, was 1835.50 or 1837.63. This is going to move higher. Next stop inside the S&P 500, 1854. Unless somehow somebody crashed the party, and the only one that could crash the party would be the Bears, and it looks like they have just simply not gotten their invitation. Why? Because they know about this monthly chart out here. This is the monthly consolidation, an 800-point, 16-year consolidation that the S&P was traveling in. It broke through that. It has on its radar screen 2350. It's trading at 1837 right now. Doesn't mean it can't pull back, but 2350 is the longer-term pattern. There is no divergence that's associated with its highs out here. I'm going to run through that once more again, maybe during the next breakout here. I'll run through that in case you didn't catch the first hour out here. That way you can really get a feel for this is not, again, this has nothing to do with me being bullish or bearish. Clearly I'm not bearish at this stage. No one should be bearish at this stage because there are no signals out here when we look at the charts. And all I'm doing is reading the charts. And bears, they have to leave signals. There's divergences that need to exist. There's some divergences out there, but most of them are disappearing. Inside of the Dow, if we take a look at the Dow on the daily basis here, on Friday, it completed its 1-to-1 A to B equals CD up. That was coming off of the November 5th swing point. That was at 15,522 and a little bit of change. It made a swing point high also on November 29th, and that was at 16,175. Made a normal retracement. But the way that price has moved offside of that C point of the A to B equals CD up, well, it says it wants higher price. That higher price is going to be 16.5, 16.6 or so out here. That way the Dow can complete its 1,000-point consolidation move to the upside. The Dow, on a longer-term basis, and this is what we'll take a look at maybe during that next break, it also has no divergence out here. That's the type of divergence associated with major highs inside of the indexes or stocks or anything out there there even at lows. If we take a look at the Russell 2000 here, Russell 2000 right now today completing the 1-to-1. That is 1167. The 1-to-1 A to B equals CD starting from the swing point of November 7th. 1079.08 is the number for your A point, your B point, which was an island reversal pattern. That was on November 29th. What's an island reversal? It is an island. It means there's price that is void in between the prior session or sessions and the post-session of that candle that you're looking at or sessions. In this case here, this was accomplished in a 3-day pattern out here. It was accomplished first day being the November 27th. The high there, 1141.50. There's a void of price because the low of the next trading session was 1142.50. A small little gap, but a gap nonetheless. And then when we came back after that Thanksgiving Day Friday, which was the shortened trading session, we came back on Monday. The high of the next candle was 1142.30. There was a gap there. That gap created a little island, a little Gilligan's Island out there. Well, they have been rescued. So this is one of those television shows that did not last very long out here. It only took about 2 weeks for all those passengers to become rescued, and rescued they were with a big wide-ranging bar on the trading session of December 20th. That says, and that is just like we took a look at on the New York Stock Exchange, which is a significant reversal pattern, that 3 drive to a top. Hey, if I were to rank them, I would rank the island reversal as being more bearish than a 3 drive to a top pattern. Well, guess what? That was taken out. The 1-to-1 A to B equals CD, 1167.57. You're trading at 1166.94 right now. Will price stop here? Hey, here's the thing. I don't really know where price is going to stop. What we use is a set of tools to help us measure where price is likely to head to. That means you always use stops. It means you always adjust your stop out there. It means you want to understand what the average true range, what the daily movement is in any trade that you're looking at. But right now, the message of the market is 1186. That's your 1 to 1.272. A to B equals CD up, and that is on the Russell 2000. Inside the NASDAQ Composite, it too is trying to complete an A to B equals CD. Well, heck, it's 1-to-1. Takes you to 4206.17. So that's its first target. It's trading at 41.65, and it's been a little bit weaker than the other indexes out here. But let's face it, it has been the strength that has been carrying everything uphill. And by uphill, what I mean by that, it has been going uphill all the way back to its hill, which was the mountaintop from March 31st of 2000 out here. The low of that mountain, the altitude low there, 43.55. That is where the NASDAQ Composite wants to head to. It's trading at 41.65. 4,400 would be its actual consolidation price target. Get you back into the 2000 level. Doesn't mean it's going to stop there, but that is where it is headed to. If we take a look at the NDX 100 right now, it's trading out at 35.78. Where does it want to trade to? Well, it's 1-to-1. A to B equals CD. That price point is 36.28. But you know, folks, doesn't look like the NDX wants to stop there. It just wants Apple to get out of the way because Apple's down $3. But the NDX says, I like that 36.84 number. 877-927-6648. We'll be right back, folks.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. A little bit of multitasking going on right now. The Dow is up 58 points. S&P is up 5. Composite is up 10 points here. Goldilocks. Let's go check in on the metals marketplace out here. Gold right now is trading up $9. Trade out at $12.50. Silver's up 43 cents, up a little over 2% this morning. It's traded at $19.91. Now, folks, just for being here, I'm going to give you a little Christmas present, a little holiday, a little New Year present out here. If you're watching us on Tiger TV, and I hope you are, if you're listening on your radio or your mobile device at TFNN.mobi, remember, you can catch the live stream of the show on all those new devices you got over the holidays out here by going to the homepage of TFNN.com, upper right-hand side, you'll see a button. 3 little smartphone-ish type devices on it. Click on that. The show will stream live. You'll see this chart. This show is archived on Channel 10, so if you're listening to the archive version, go check out the video version of it as well. We're taking a look at Goldilocks, and what we have on Goldilocks, if you are looking at my screen here, you see a little black diagonal line that's headed to the south. That's in the price chart area, and you're going to see a little diagonal line that's headed to the north, and that's in the lower section. That tells us what we have here is what's referred to as a price relative strength divergence pattern that is underway inside of Goldilocks. You might say, hey, Steve, when was the last time we saw one of those? Well, guess what, folks? I'm going to pull the chart back here. The last time we saw one of those, now let me get the actual crosshair out here. That would be helpful. That took place at the low back on June 28th, 2013. Is this worth paying attention to? Oh, I think so. It most certainly is. Is this the time to buy? Could be just a tad early on the trigger out here. We'll get some more information here over the course of the next few hours. Maybe it's over the course of the next few days out here. But I just gave you a gift, a real pearl out here with regard to Goldilocks. So speaking of that, because it's a good segue into what I want to do is now, first, if you've never tried my newsletter service, Mastering Probability, go do yourself a favor and do that. Take some of the money that you receive this holiday season. Or look, it doesn't cost you anything other than putting down a deposit. So you're going to put down a deposit. You're going to get access to all of my momentum trading strategies. Included in the newsletter service is going to be a money management workshop that you want to take. It's a 90-minute workshop. That is worth the price of admission alone, but it's free. It's included in there. You get access to using my position size calculator. That is a must for trading and investing. You must know what the average true range is on anything that you trade. Now, and what you really should be is resolute about your New Year's resolution. In 1929, before we had that crash out here, guess what we had at the highs? We had a price relative strength divergence pattern that set up. Guess what? When the market made a low that you could buy, we had a price relative strength divergent pattern out here. Back before the crash in 1987, guess what we had? We had a price relative strength divergence. Now, this was a confirmed signal out here. So just because you have the divergence, you got to learn how to trade this pattern. I teach people how to trade this pattern. But this pattern existed in 87. It existed at the dot-com bubble, at the highs and at the lows. It occurred at the 2007 high. It occurred at the 2009 low out here. It occurred intra-period at a little bit of a high back here in 2011 and a little bit of a low in 2012 inside of the Dow. Here's the FAS on a short term, on a 10-minute chart out here. This is a pattern you want to learn how to trade. You want to learn how to buy and sell. The D point here is light sweet crude on a daily basis. Here is the 30-year Treasury bond as it made its high back on July 25th, 2012. Guess what accompanied it? That's right, a price relative strength divergence. Here's Chipotle at its highs, a price relative strength divergence. Here's Apple at its highs back at the $700 range, a price relative strength divergent pattern out here. Folks, go right now, sign up for Mastering Probability, get access to all these tools, allow me to give you this gift and to be able to teach all this stuff to you. Here's another little morsel. Here's a gift. We're now taking a look at Goldilocks on a daily basis. It has not given us the confirmation signal yet to go long gold, but you should be looking at gold. You should be looking at gold equities. Ideally, that what this gives us here is it gives us an opportunity to get in, maybe as a New Year's present while everybody's out there partying. You and I will be buying gold. We'll be buying gold stocks out there, preparing for the beginning of the year, because most money managers don't want to have any kind of gold in their portfolio that gets shipped off to their clients. It's just been too damaged here. But that could be a whole different story as we begin 2014. Hey, these patterns, they don't work all the time, but they are great patterns, and they help you to identify where your stops ought to be placed. And that is in Goldilocks right now, trading out at 12.40. We got silver up about 44 cents. It's trading 19.93. Light sweet crude up 15 pennies. It's trading 99.37. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With market insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow is up 48 points right now, and we're going to switch over. There's a little discussion going on inside the Tiger Den here. I see some messages with regard to the IBB. B as in boy, B as in boy. That is the iShares NASDAQ Biotech ETF out here. Right now it's traveling out at a price of $227.73. Before we went on that last break, I was sharing with you a great momentum trading tool. I've got it automatically programmed into my software out here. That's the black lines that you'll see occasionally going across the top or the bottom of the screen here. That's where we've got that price relative strength divergence. Now, it's so imperative, it is so important that you learn how to trade that strategy versus just noticing a divergence that is out here. We do have a potential divergence that is setting up. This is the daily chart that we're taking a look at inside the IBB. The initial touch point that is being used is the swing point here from December 3rd, 2013. Out there, I don't have the what the RSI number. Well, I can tell you what that number was. I guess I can. Heck, I can do just about anything. If you give me just a moment of time, where did I put that data box? There we go. So let's do this here. So when the RSI level that we're taking a look at right there, that was at the 71.53 mark out here. As it made a high back here on December 24th, it made a high of, a moment here. How can that possibly be? Because I don't know why it even shows something here for December 25th out here. December 24th, the high that it made out here, the price high that it made was, come on, baby, don't do that to me. The price high that it made out here was 227.74. That gave a little bit of price, and the RSI reading was 64.37. So the IBB was making a higher high with less relative strength. Was that a reversal signal right then and there? No, it most certainly was. Have we gotten a reversal signal here yet? No, we have not. So it's making a higher high. The RSI reading as we speak here right now is about 65.81. So it is a valid pattern. It is not a valid short signal with inside the index as we speak here right now. Now, why is that important? Why is it important to pay attention to this? I think that the evidence was pretty plain as I flipped through a number of charts for you, especially the indexes out here. But let's go take a look at a IBB low that was made out here. Let's take it back to a low that came in using the same indicator here, and I'll take it back into November 10th, 2012. And at the lows here, where you can see all these green indicators on the screen, if you're looking at, that's part of my momentum system. It tells you clearly who has control there, and it was the bears that had control. There was all kinds of selling pressure inside of the IBB. In fact, you can see it made a high back here. A relative strength divergence high back on October 6, 2012. The price level out there around the 147 mark. It makes a run all the way down to the low on November 10th, right around the 125-ish mark. So it goes from the high of a valid price RSI divergence pattern, and it makes a low, a tradable low, as it comes in on November the 10th out there. And that is what's going on inside the IBB. So this is a tool you want to absolutely understand what's going on inside the market. That's why it's so important for us to be paying a look at Goldilocks. Now, does it work all the time? Of course not. Nothing works all the time. But when you learn how to trade it, that's very important. Just having the divergence is not enough. It is not enough. And then when you do have the divergence and you get the confirmation, then you can take the trade. Now, there's a number of other tools that you want to be taking a look at before you take that trade as well. If we take a look at where we're at right now inside of the markets, inside of the NASDAQ composite, it had a price relative strength divergence here as of December 20th, but that is void. You can see that black line no longer exists out here. Why is that? Because we never got a valid signal. Price went to a higher high on December 23rd. We're at a higher high right now. There is on the daily chart no price relative strength divergence. Let's take a look at a weekly chart here for the NASDAQ composite. It has been strong. No divergence out here as well. Last time that we saw any, which never gave you a sell signal, that occurred here on October 4th, the week of October 4th, 2013. Let's take a look at each of the indexes out here. Let's take a look at the Dow Jones Industrials. Let's take a look at the weekly chart. You can see when it did have its divergent patterns here on the weekly, those have vanished out there. As we took a look at the monthly chart here just recently, it too has vanished. Or if I didn't do that because that wasn't a part of the presentation, let me just come back out here to the monthly chart for the Dow. Let's put that up on the screen here, because back in 2007, you had that divergent pattern, just as you had going back back to 1928. You can go back and find any significant high inside the market or significant low, and it's usually, not all the time, it is usually associated with a price relative strength divergent pattern. When it's not associated with it, guess what it is associated with? That's right, an absolute reversal signal. That would be some type of bearish reversal signal. Do we have that now? No, you're trading at its session highs at 16,423. There is no bears. The only bear out here on the monthly chart that took place was the month of August. And that bearish reversal signal got evaporated actually the following month. There was no follow-through out there. So we have no price relative strength divergence inside the Dow. That's a good thing for the bulls. The market is not. This is a monthly chart. This chart here really doesn't become valid until when? The end of trading on Tuesday. It's a full day of trading come next Tuesday. So we'll certainly be paying attention to that chart as we take a look for divergence. Let's go to Andre in Houston. Andre, thanks for calling. Thanks for holding. How are you today?
Hey there, good morning. Merry Christmas to you.
Thank you, and same to you. Did you have a nice holiday?
Yeah, I enjoyed it, man, with the family, man. It was a real big turnout, too.
Oh, that's great. I am glad to hear that. Glad to hear that. So now, do you have a couple days off?
Yeah, right. I got to go in later on today.
All right. Well, hey, thanks for spending your morning with us. We appreciate that. You wanted to look at Ternium. Is that TX? Is that the ticker symbol?
No, I was actually calling on sector rotation.
Ah, okay. You're from Houston, Texas. There's where the TX comes in. Okay, I got it. hey, just so you know, there is an actual ticker symbol out there, TX. It's and it looks like it's in a pretty strong bullish mood out there. So, in any event, okay, go ahead.
All right,
yeah, fire away.
I was trying to look at the trend lines that we draw on the different sectors, seeing what is leading. Those that are leading are not those that usually lead to a huge breakout in the market besides technology. So we have to assume that basically when the pattern completes either on the ES Mini or the SPY, we may go sideways. Maybe. Not sure. Possible.
Mm-hmm. Mm-hmm.
How do you do your analysis for sector rotation since you know those leaders and you know those laggers? You kind of get what I'm saying on which ones will start having the momentum, start moving back to the target price of those leaders anyway. You get what I'm saying? Because the whole market has to move in tandem.
Yeah, so give me an example of something that you're looking at, and maybe we can analyze it together. We can take a look at it together. So give me something that when you're taking a look at a sector laggard as an example. What would be a sector laggard
so
that you would?
Laggers would be healthcare. Man, I wish I would have put all my. I have my leaders.
No, that's okay. And usually in saying the healthcare, would you be saying the XLV then? That would be what you would look at.
Thank you.
No, no problem. Okay. I tell you, it's a team. This is teamwork here. So if we take a look at the XLV, and you would say that this has been a laggard from what standpoint? Because I show this as being really strong. So I want to come back and take a look.
There's a trend line drawn. Let me see if I can get back to my chart.
Okay.
But
and is it a trend line on a daily, a weekly? What's the time frame that you're looking at?
You can do it on a weekly or a monthly, but when you draw like my leaders, let me go to like the builders, because the builders run pretty big, strong turnout. If you draw a channel line, the top of the channel line would be coming off of the week of, June 15th, 2012, and it will intersect at January 25th, 2013, so that would just lead all the way up.
Okay.
So,
but you're saying that this is, because if I come off of the, here's if we take a look at my chart out here. And if you take a look at the XLV, and Andre, what I've done is I've come all the way back into the 2009 time frame. So I would start with the 2009 low. I would use the candle session from the week of March 13th. So the open of that body, which is 2201. And then what I've used as my next touch points out here, I'm using December 23rd, 2011 to form the bottom of that little rising price channel. And what happens is it really intersects with your June period for 2012. So on the weekly chart, it uses really the open of the body on June 15th, the week of June 15th out there. So that represents, I think, a pretty good bottom of a channel line. Now, the top of the channel line, it's hard to say whether that truly has been drawn or not, because out here on my chart, this is where I'm using a little bit of guess. Let me draw an actual line out here. Let me use a line tool that I can move around. And because that channel line along across the top has moved a couple of different times. At one time, it's this red line that's going across my chart here, and it was really being benchmarked off of the highs back in January of 2009, and then maybe December of 2009. Right. And now that's really become kind of like my midpoint area here. And so the healthcare sector, it's above this, what I have drawn in here is a rising price channel, but that's not really breaking a trend. But to me, this is a strong sector when we take a look at So I when I take a look at it from this standpoint, if I take a look at it using my momentum indicator out here, the XLV on the daily basis gave you a real nice buy signal in here on the trading session of October 11th. That was after a little bit of an A to B equals CD down pattern. So that was a nice buy opportunity. There was a little bit of a sell pattern out here that came in December 12th. And then it got a little jostled around, a little sideways consolidation. You got the confirmed buy on December 19th out here. So, I mean, to me, this looks like a strong sector. I think you mentioned, what else? You said the home builders. The home builders
Yeah, the home builders are a good leader, too. One of the ones I was looking at, I guess, would be more on it was just trying to look at all of them and trying to see where was the momentum at, as well as where has momentum broken down that may have to catch up with those that are already ahead of the market already. I'm trying to go over my charts, but I'm having a problem right now.
No, that's okay. So here's what I would ask you to do as you're going through your charts and you come across something. Because what you're suggesting, your premise is that, hey, something has been a laggard and it needs to really catch up to the market, and that might be a good place to invest in. And you want to understand when the momentum has changed. Is that the question that I'm hearing, or no? It is, okay. And I'm actually going to put the home builders up on my screen here because one of the tools that I have that's included in my newsletter subscribers get is I scan through the entire S&P 500 as well as many of the sectors. That includes the mining sector. It includes some new sectors that I took a look at over the last couple of days. So there's some new trades that we're taking a look at. And what I've got in here right now is the entire housing sector. I could actually just do the home builders if I wanted to, but it's really the entire it's in the entire sector. And what it's doing here right now to really answer your question, so that I answer, because it's the same question I have, is, hey, where's the next trade setup? Where's the next best opportunity? And what I like to do is I like to understand what's the momentum signal on the monthly, what's the trends momentum signal on the weekly, and what is it on the daily. And so that way the scan that all subscribers get to a mastering probability is the strength that's inside there. Now, if you want to take a look at something that's weak that maybe is getting stronger, what we want to do there is you want to take a look at something. So right now, what is showing up on my screen here is everything that is strong on every time frame. So you've got two different philosophies. One is to buy a laggard to see if it catches up. Another is, hey, in a strong momentum marketplace, why not take something that is the strongest to see if it can continue to rise out there? And what's on my screen here right now, like as we speak here right now today, there's I haven't looked at it, but Simpson Manufacturing, SSD, today just gave us a nice little strong uptrend signal out here. iRobot, IRBT is probably one of the stocks within inside this sector that has been a little bit of a laggard, meaning the bears had enough pressure to push price down. This was both on a weekly and a monthly back in December 17th. Looks like December 21st on the weekly chart. So that might be something with inside this that's still in a bullish uptrend that could have an opportunity to catch up. If you want to find something that's weaker, because what I have turned on this right now is a filter that just only takes a look at the bullish. If I want to take a look at something that would be very bearish out here with inside the sector, and there's not much. In fact, there's basically nothing. On the daily time frame, Pier 1 Imports is probably one of the weakest. It's just making a retracement right now. So PIR, and then you've got where would be now? You've got to go over. Oh, you've got Williams and Sonoma. WSM is the weakest. So Williams and Sonoma is the weakest of any of the stocks with inside here. Can you hang on through the break here?
Sure.
Okay, we'll go take a look at Williams and Sonoma. And if you got another weak stock you want me to look at, we'll put it in here and see what the trend is. 877-927-6648. Dow's up 60. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. The Dow is up 52 right now. S&P is up 4 points, and we're on the line with Andre from Houston. We're taking a look at the question posed is, how do you know when something, in essence, that has gotten its butt kicked this week is making a change in trend in the marketplace and maybe wants to catch up with inside the sector out here. And during the show today, I've shared with you a number of different tools that I teach, that I provide to subscribers of Mastering Probability. volatility. One of those that we looked at was to try to understand the real strength or weakness in the market, and that was inside each of the indexes, which typically associated with market tops are a price relative strength divergence pattern, which right now on as of Monday was taken out inside of the Dow. So as long as the Dow closes right around these levels here, a divergent pattern that has been associated with tops on a longer term, on a monthly basis, is gone. Andre, maybe one of the easiest ways to answer that question, and it's why I developed the this Rhodes momentum indicator strategy and tools out here, was to really take a look at something that had its butt kicked. That using traditional tools, AB equals CD or volume patterns out there, would have told me to stay away. Yet it actually was changing out here. The trend was changing, and the trend was changing that there was buying pressure. And a great example of it was Netflix. And Netflix here, as it was making its high, it had a price relative strength divergent pattern, as it was making its low as well. And this is back in the time frame of around November in 2011. It also had one of these bullish reversal type signals out here. Now, the actual true signal to go long inside of Netflix really would have occurred December 12th, 2001, right around the $71 mark. And right now, I think it's trading at about, and the trend change, the confirmation of that trend change would have occurred January 4th in 2012. Now, along the way, there have been some times to get in and get out of the equity, and as it makes these patterns here, and it's the same thing. It's like taking a look at Hewlett-Packard, HP as an example. We take HPQ is Hewlett-Packard, right? HPQ, I think, is their ticker symbol. So if we take a look at Hewlett-Packard out here, and I try to pull this back, here's another equity that got its butt kicked. It made a low back here at about $10.98. But my momentum indicator gave us a signal on November 21st that the trend was potentially changing. I would not have taken that trade right then and there, but I certainly would have back on December 4th when it gave a confirmation, and that was at a price of about $13. And so what I look for, that's really what I do with this tool here, is it helps to monitor and understand when the trend is changing, when is buying coming in, and then when is selling coming in to an equity. So I hope that, to me, it's because I've gone and I've back tested it and applied it to so many different instruments, whether it's currencies or different time frames. To me, it's the most reliable tool that I've been able to identify. Not just because I developed it. I developed it out of a need to answer the question that you asked me. It really isn't. I don't say that to impress you. It impresses me, but I don't really. It's not. I developed it to answer the question.
You put your foot in your mouth, Steve.
No, it's to answer that question, because for me the question was, there were stocks that just were good names that had gotten so beat up. How do we know when to come into those trades? When do we take a stab at them? And that's really what I created and developed. It's the best thing that I've been able to find for me that really answers that question. So I hope that helps you, my friend.
Yeah, you did. I appreciate it. Appreciate your help, man.
All righty. Hey, have a good day at work, and always good to hear your voice. Folks, stay tuned. Basil Chapman is up next. It is terrific Thursday. That might mean that Larry Pesavento would follow Basil. And if you're off to start your day, have a great day. I look forward to seeing you tomorrow morning. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers
subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.